Assalamualaikum and hello everyone. Welcome back to my channel. Today's presentation is on receivables, specifically accounting for receivables as prescribed by MFRS 9, which is equivalent to IFRS 9 financial instruments. And today we're going to discuss an exam question, June 2019. We're going to discuss the question and also the step-by-step discussion on how to come with the answer. Let's start. Okay, question 3A. GMS Berhad has been involved in various business activities since incorporated in 2008. The company closes its accounts on 31st December every year, so it's the calendar year. The following transactions were extracted from its books of accounts for the year ended 31st of December 2018. You have the following transaction, which is on the 12th of May, where invoice was issued to Rest House Indah. And remember, the reporting entity here is GMS. So Rest House Indah were the one that received the invoice, and that was because of the goods being provided. So this is a credit sales. The second one, 28th of May, this is loan to the customer given by GMS to a customer called Genie, a 90-day 10% note. So this is a note receivable. 10% is the interest revenue. And on 6th of July 2018, the company GMS sold goods worth 40,000 to AME Trading, and in return they accepted a 60-day 12% note in full payment or in full settlement. So this is again another notes receivable or bill receivable that are received by GMS, accepted by GMS from AME Trading. 31st of July, in order to obtain immediate cash, what GMS, the reporting entity, did was they discounted the notes from AME Trading, so they do not go and collect the payment themselves. Instead, the company sold off the note to a bank, ODM bank, and they were given the net proceeds of 4245. Remember, the goods or the notes that was earlier issued was 40,000. 30th of December 2018, RHI or Rest House Indah is declared bankrupt. So 75% of the amount is collected. So if you check here, 20,000, only 75% can be collected. So meaning that some bank account must be debited, and the name of the company, Rest House Indah, that is declared bankrupt, you still somehow manage to get your collection. So that 75% should be credited to Rest House Indah. And the company directors decided to write off the remaining amount as uncollectible. So this is relating to bad debts written off. And under the allowance methods, right, when you decide to write off your bad debts, you are not going to create any other account except that will be recorded in the allowance account. So allowance account will be debited, and the accounts receivable Rest House will be credited if you are asked to do that. And amount of receivables not including the transaction on 30th of December, you are given the statement that this balance as at 31st of December does not include the transaction on 30th of December. So the outstanding balance are having not yet included the amount that is 250,000 has not been included. Okay, let's look at the question. What were you asked to do? You are asked to list 3 transactions that affect the credit side of the receivable account. So when we talk about credit side, means whatever that is being credited to the receivable account, right? What are those items that normally being credited? Okay, the first item is the return that are made by the customer. Let's say there was a default or wrong goods being delivered. So when the customer returned the good, you debit your return inwards and you credit your receivables account. So that was the first one. The second one is the payment that is received from the account receivable or your customer for the amount owing. So you debit bank, you will credit your account receivable, so that affect the credit side. The third one is the uncollectible account receivable that are confirmed cannot be collected, and you write off as bad debt, just like on the 30th of December there. So this one you are going to credit your account receivable and you are going to debit your allowance for impairment of receivable. Next, you have the next thing that would affect the credit side is the derecognition of receivables when your customer made full payment and you no longer have the right to receive cash from that particular customer. So that derecognition transaction, where you credit your account receivable for the payment that you receive, you will debit your bank. That one is again also affecting the credit side. And the last one is sales discount or discount allowed. And this one you need to just pick up any three of it, right? Just any three, and with that you get your marks there, which is for 3 marks. Next, we go to second part of the question. Second part of the question, or question 3b, is the same, based on the same table given, the same transaction that were given here. You are asked to identify the types of receivable. Earlier on, I've already gone through with you all this transaction. You would notice that you need to identify the types of receivable. There are 3 types of receivable, if you can recall from the lecture. One is the trade receivable, second one is the notes receivable, and the third one is other receivable. So let's see in our case. So we have account receivable Rest House Indah that arise on 12th of May. So that one is one type of a receivable, the first type, right? That was on the account receivable. I'm just giving you detail on the Rest House Indah to show you why it is part of types of receivable, because of the financial asset nature of accounts receivable there. And then you also have 2 notes receivable. One is which is the second types of receivable. The first one is the one that you receive from Genie because of the loan that you took, the loan that being taken by Genie from your company, GMS. And the third one, or which is the second under the notes receivable, is the 12% note receivable received from AME as full settlement of the credit sale that you receive here on 6th of July. Okay, that's the answer. And you need to identify, and that one is for 2 marks actually. Next, you are asked to construct the journal entries for the transaction on 31st of July, which is on this date, right? And also on 30th of December. So this one is the transaction where you discount the notes receivable to the amount of 40,245. And on 30th of September is the transaction about bad debts that has to be written off because 75% of the amount cannot be collected. 75% of the amount can be collected. You will record that, but you will have to write off the 25%, which is 75%, the difference between 100 and 75. So that one must be written off. But for the payment that is being collected, you need to go and debit your bank account with the payment. So let's see what are the journal entry. For the one on 31st of July, debit bank, and the amount that you will debit is 40,245, which is based on the proceed that you receive from the notes receivable, right? And what will be credited is note receivable. Earlier on 6th of July, you have debited the note receivable if you do the journal entry. Now, you discount the notes to ODM Bank, and therefore the note receivable account must be credited with the value there, 40,000, the face value. So again, it will be credited with interest revenue, which is 40,245 minus 245, the interest revenue. So 40,245 minus actually 40,000 here. 40,000 the face value. So you have 245, that one will be credited as an interest revenue to the statement of profit or loss. That transaction is the discounting of notes receivable. Next is the transaction on 30th of December, which is referring to the payment that you receive from the bankrupt customer, AR Rest House, account receivable Rest House Indah. I put AR there, stands for account receivable. And the remaining amount that has to be written off as bad debts, which is the 25%. So in total, what you receive is just 75% out of the total amount that you are supposed to get, which is out of this 20,000, right? Only 75% can be collected. So you have 15,000 here. And the remaining 25% cannot be collected. And this is where you record your bad debt. And that is debited to the allowance for impairment. And it will be credited to account receivable with a total 20,000. But bear in mind the 25% of the balance that cannot be collected has been written off. Next, question 3D. This is about the same thing again, but now we are asked to do the part on allowance method. So if you look, we have already read the question. So you have looked at the question earlier. Let us just go to the bottom part. Since it's incorporation, am I right? Since it's incorporation, right? Should be some ing there. GMS has adopted allowance method. So allowance method normally will involve some estimation of those amount that is going to be uncollectible. So on 1st of January, which is the beginning of the year, you have the credit balance of allowance for impairment. So the allowance for impairment, let's say we use AFITR in short, the balance brought down was 15,800. And this is on 1st of January 18, balance brought down, meaning that before the current year, the beginning of the year was that. So 15,800. The company estimate allowance of 4%. So this is the estimated credit loss rate of the company pertaining to the uncollectible amount, and they are actually referring to the percentage from the account receivable closing balance. So we need to go and calculate what are the closing balance and check that. What are the requirements? You are asked to advise the management on the amount. You are asked to advise on the amount, not just simply anything. Amount of what? Amount of allowance for impairment to be disclosed in the notes to the account. So how much should be disclosed in the notes on the movement of allowance for receivable. And that one also you need to show the value of the account receivable as at 31st of December. Meaning that the value that will have to be disclosed in the statement of financial position under the current asset. Okay.